It's about 450 days uptrend for the dollar, right? The US currency, which is the dollar index, the DXY. It has been going up for such a long time, and we have had this massive correction. We are going to explain why. As you can see, it went down and we have had a massive dip. Now it is slightly recovering, but it is now using the previous support as resistance currently, and it's struggling to get back over it. Now we will see if the dollar explodes back up, but the high was 115 and it is now sitting at 110, nearly 111. Now if it goes past that, then it could start rising again, but if it keeps going down, this could be the end of the dollar bull market. There is a reason, significant reason actually, why this might be the end of the dollar bull market, guys, which will mean that all the stock markets, the crypto assets, and every kind of other asset will start to pump, including gold and commodities finally, and also all other countries' currencies, you know, like the UK currency, the euro currency, and all of the currencies that are not the dollar can finally recover a little bit, because this is for a significant reason, and that is that the Federal Reserve has changed the rate at which they have decided to raise interest rates. What happened was the US bond market. Let's show you guys. This is the US bonds 10-year. This is the most important story of the day, guys. This is so critical. But what happened was it started to rise out of control here, and the US debt, as you guys know, US has record debt. They were struggling to see this go higher because the debt in America would have become out of control and unaffordable. So the Federal Reserve has actually started here, and this is why it went down, right? And the same thing happened to the dollar. So the main 10-year US Treasury bond market, which is their debt, the US debt market, and the dollar has collapsed since then, because the Fed has made a crazy announcement, which is that it's such a small thing, but it means the biggest thing for the markets because it has the most massive impact. And that is that they have changed the rate at which they are going to continue raising interest rates. In other words, they are giving up a little bit on the fight against inflation, because everybody now expects them to not keep raising rates as fast as they were doing before. And this is massive, guys. The biggest impact weighing the markets down was the interest rate rises, right? It is now going to be less than what everyone initially expected. If you actually go to this website, the CME Group, you can see that the expectations for the next Fed meeting interest rate hike decision, and you can see that it is less than before. So the markets are now thinking that the Fed is going to slowly stop raising interest rates by first raising them less and then eventually actually stopping and then potentially cutting them. So because of that, this is great news for the markets. Everybody thinks that this is good news for the markets, so everything is starting to recover and pump, right? But this amounts to a Fed pivot, the big Fed pivot that everyone has been waiting for, but nobody knows it or has detected it. But basically, I think that this could be the pivot decision, because, guys, if you check out what Peter Schiff is saying here, he's saying, I'm going out on a limb here and predicting that we have already seen the Fed pivot. Now, it wasn't a pivot in the sense that the Fed has gone from hiking interest rates to cutting interest rates. It hasn't gone from quantitative easing to quantitative tightening, but it is a pivot in rhetoric. In other words, it's a pivot in the way that they're talking. So they haven't actually cut interest rates yet. They're still saying they're going to raise them, but just slower than they were going to do before. And what it amounts to is an easing of monetary conditions. This is why the markets are starting to pump. This is why everything is starting to pump, right? Bitcoin is pumping, as we saw the last few days. Bitcoin is recovering, and all of the other assets are recovering, as we're about to show you here. Because what the Fed is going to be doing going forwards is starting to walk back just how aggressive its rate hiking campaign is going to be. So that is what the change is. The change may be subtle, but it will be significant. Instead of talking about the urgency of the inflation fight, he thinks that the central bankers at the Fed will start talking about how much progress they have made in fighting inflation, but they actually haven't. So basically, the 10-year Treasury yield hit 4.3% in the US, its highest since November, which we just showed you on the chart. The national debt, the highest since 2007, when the national debt was under 9 trillion. Today, it's over 31.2 trillion, guys. So at 4.33% annual interest on that national debt would exceed 1.35 trillion more than is spent on national defense or social security, which in other words is a crisis, an unaffordable crisis that America simply cannot afford. But this was happening. This is why the Fed had to kind of go back on their interest rate rhetoric, and they started saying that they're going to start raising them less, right? This caused the US 10-year bond market to come down instead of rising up out of control, the high interest rate levels going out of control, but it also caused the value of the dollar to collapse and come down. And as you can see here, the dollar has quite a significant drop. Now it is having a slight bounce here and so potentially recovering, but the thing is, this small drop was enough for all of the markets to pump. Now let's check out Bitcoin as the main example. Instead of going over all of the prices now, we can just quickly see that if we zoom out a little bit, we can see that we had this pump here going on, right? So we did see this massive pump, Bitcoin going up now. So it's essentially like heading up, but that is a massive pump because it is a breakout from the last few weeks, few months from Bitcoin, and it is pumping up here. So Bitcoin kind of got set free by this Federal Reserve decision. Now it's not just Bitcoin, it's actually all other assets. If we check out gold, it's actually looking quite stable, but it is not going down and making new lows against the dollar. That is very significant. And then we have oil, which is kind of rising up in price as well. But let's see the impact on the stock market. So we did have the stock markets going up, S&P 500, NASDAQ going up, Dow Jones going up. They are basically not going down as fast as they used to be going. So the UK currency, the pound and the euro reacted the fastest against the Fed's decision, because as the dollar went down, the main things that went up is all other currencies, especially against the dollar. So the main currencies, the pound, the euro, even the Japanese yen actually went up against the dollar. Now they are slightly down today. However, if you see the past few days, they have had significant green candles. This is the pound as an example. So yeah, let's check out something here. The Fed's, Peter Schiff said, the Fed's feigned resolve to fight inflation lifted the dollar, right? Causing commodity prices to fall from their highs. This is what has been happening the past few months and the years. But because falling commodity prices enabled the Fed to signal less aggressive rate hikes, the dollar is now falling and commodity prices will soon hit new highs for people in the US, right? That is what is significant. This is going to become a crisis for the US. Something has to give, right? Something has to suffer, and they are turning their debt crisis into a currency crisis, a potential currency crisis. And if we do look at the dollar, it has started to fall down now. It is currently here, but it did make a newer low from the previous low. So it made a lower low here. And as you can see up here, it has made a lower high. This is a significant technical trend. If this continues, making lower lows and lower highs, then that is going to be the beginning of the confirmation of the end of the dollar bull market, potentially a dollar bear market, which means a massive bull market for crypto, potentially for stocks, and especially for commodities as well, but also other emerging market currencies and other currencies that are not US. So the pound, the euro, the Japanese yen, and other sort of European currencies as well. So they are going to be impacted greatly by this. So this is a massive and very, very important decision, guys. But the most craziest thing about this whole story is, why are they raising interest rates in the first place? Like, what is the main reason they are doing this, right? Which has caused all of the markets to collapse over the past year, right? And it has caused us to go into recession, basically, right? The reason they were doing all of this is to fight against inflation. They haven't actually won. Inflation, in fact, is still high. In fact, this month it came out higher than the previous month in the US. So that is an uptrend. Inflation is actually still rising, but they are already giving up their interest rate raising fight against inflation. So the Fed is in between a rock and a hard place, because they have recession on one side, and on the other side they have inflation going out of control, potentially leading to even hyperinflation. They have to pick either a recession or hyperinflation, or out of control, really strong out of control inflation. And that is the crazy thing, because right now they have opted to choose inflation. They have not got inflation under control, yet they are already starting to slow down the rate hikes and potentially signal that they are stopping the rate hikes, which is very dangerous, because it could cause the value of this dollar to keep collapsing down and then go down and down and down and become a really bad and crazy situation for the US. So we are going to continue following and see how this develops. Follow us for this story, but it will be initially good for Bitcoin. We will see a huge cryptocurrency market continuation of a rally and potentially into a small bull market coming up here. So that will be significant.